Hey everyone, welcome back to Corporate Decoder. Today IMAQ just filed a current report and it looks like they are buying themselves a little more time. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is all about extending their deadline to find a company to merge with, and it seems like they are paying for that extension. So International Media Acquisition Corp, or IMAQ as you might know them, is a special purpose acquisition company, or SPAC. Think of them as a company that goes public itself with the sole purpose of acquiring another privately held company. This report, filed on May 29th, 2026, tells us they made a payment to extend the time they have to complete that acquisition. They put down $2,000, which sounds small, but for a SPAC like this, it is a common way to push back their deadline. This gets them an extra month from the 2nd of June to the 2nd of July 2026 to find that perfect merger target. Now, IMAQ has a few different types of securities out there. They have common stock, warrants, rights, and units. These securities, like their common stock trading under IMAQ, warrants under IMAQW, rights under IMAQW, and units under IMAQW are all listed. The company is also ticking the box as an emerging growth company. This means they get to follow some less stringent reporting rules for a while. The main event here, as detailed in item 8.01, is simply this extension. They are paying to keep their SPAC alive a bit longer. There is also an exhibit 99.1, which is likely the formal extension letter detailing this agreement. And then you have the standard cover page interactive data file. Now, let's talk about the broader context. SPACs have faced a really tough environment lately. Many of them, especially those that had their SPAC IPOs a year or two ago, are struggling to find suitable targets before their deadlines expire, or merging at valuations that are much lower than what they were hoping for. The market has become much more discerning about SPAC deals, and frankly, the SPAC boom seems to be over. Many companies that went public via SPAC have seen their stock prices plummet significantly after the merger. For example, many SPACs post a SPAC have seen a 70 to 90% decline in value in the year after their merger, especially for smaller companies. Companies that don't find a deal often liquidate and return the money to shareholders. This deadline extension is a crucial step for IMAQ to avoid that liquidation scenario right now. It shows they are still actively pursuing a merger, but it doesn't guarantee success. The real question is what kind of company they are trying to acquire and what the terms of that deal will be. Without news on the target company, this extension is just a pause, not necessarily a sign of good things to come. The markets are watching these deadlines very closely. The risk here is clear. If IMAQ doesn't find and close a deal by the 2nd of July 2026, the SPAC will likely be liquidated and the money returned to shareholders. Given the current market for SPACs, finding a deal that satisfies both the SPAC and the target company, and importantly, the shareholders, is a significant challenge. What I am actually looking for is any news about a potential merger partner. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives.